Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, May 21st, 2018. I am Frank Ochoa, aka Pivot Boss. Here's a look at the daily time frame of the ES. I was out of the market on Friday and partially on Thursday for family matters out of town. Back in town, so I'm just seeing how the market's shaked out overall, and you can tell here from our key levels that we've been watching, we continue to trade around some very important levels here in the ES. Number one, just to recap, that 27.0375 is very important. It's the midpoint of the impulse sell-off from earlier in the year. We're continuing to trade right around that area, forming a small box right now. And again, we're taking a gap up here Sunday evening and holding just above that zone, still trading around 27.31, which is the FOMC key level from March 21st. And again, this right here, this little box is starting to build energy for perhaps the next move to come. If there's any failure to hold the 27.0375s, it opens up a rotation all the way back down to recent support between 2600 and 2620. Now, if any pullback does occur into that zone, any support in that area could lead to a squeeze as well. So this is not to say that we can't move higher. It's right now we're building energy. We're doing it at an edge of the chart, at least the previous month's highs. And right now this could build the energy for a move in any direction. Remember, compression, volatility compression says nothing about direction. It only says that the range, the spread of the prices is very tight, and that should likely lead to the next phase of expansion at some point. So again, right now the current flow is to the upside, which could lead to overall continuation in the 2800 if this 27.0375 continues to hold. Failure to hold that level rotates this thing right back down, so we continue to hold in this zone. One last thing to note here, the ADR, so the average daily range over the last 5 days and over the last 10 days, has shrunk considerably compared to where it had been earlier in the year. This was much higher prices here in price range, and now this thing has compressed and is way down here. So at the moment, we're currently averaging about 23.5 points per day on a 10-day basis, 22 points on a 5-day basis, which means you should be looking to play to closer profit targets on an intraday basis. We're not getting that much movement like we had in the past, and that could be basically an early dose of summertime type of trading as we head into June. So taking a look here at the NQ, you'll see very similar price action, compression of price range. Right now trading about 79 points of range per day over the last 10 sessions, about 84 on a 5-day range basis. And you can also see very similar to the ES, here's the previous month's high right there, that white line, and we're holding right on top of it, forming a little box here. And this is building energy. It's building energy for either a squeeze into 7200 or any failure, and a failure to hold that 6850 rotates this right back toward recent support between 6450 and 6500. And so again, that's the same framework we've been working off of over the last week as the price continues to build energy for that next move. So again, 68.50 here is going to continue to be the major pivot to watch for the NQ. All right, taking a look now at crude oil. You'll notice here with crude oil, we continue to hold within the framework of a very bullish trend. Very bullish trend that's continued to play out. I mentioned before, I'm not eager to sell on a swing basis by any means. This is very strong, and we will likely continue pushing higher toward the 74.52 target that we have above. That's the next major target. However, we've been going sideways here for the better part of nearly 2 weeks. We may need to see some sort of pullback into the trigger zone, which then could lead to the next bounce higher. So while we could see a short-term counter trend move, the better opportunity will come upon defending that pullback for the next major squeeze. And again, the zone between 68.75 and 69.50, that zone right there is a very good zone to watch for any signs of strength. But at the moment, we cannot even see movement below the 8-period average, let alone dropping way below the 21 period. So this has been extremely bullish, but the price range is very tight, which means we could begin to see some breakout expansion type of behavior soon. And again, given the uptrending market, if we break down first, I'd be watching for signs of a trap and a reversal to new highs. Any failure to hold 68.75 overall suggests more downside, but right now we'd be looking to defend pullbacks until proven otherwise. All right, taking a look at gold. You'll notice with gold we were looking for perhaps a bounce off the lower edge of the trading range yet again. We've seen many rotations off this zone. We've seen many bounces off the upper end of the range, but over here things just took a long time to really get higher. It failed to really establish acceptance above our 1320s, and at that point we mentioned that anybody that's long may want to start lightening that load or getting out completely, and that's exactly what happened. Everyone got out, ran for the exits at the same time, stop run occurred, and now we're right back to value at 1280. So that was the first major target, was if we can't hold 1306.60, we drop into 1280, which is CVPOC, followed by perhaps a continuation toward 1252 and also the 1240 level. So those are the next major levels below. And again, any bounce, especially into 1300 and shy of 1306, could be a selling opportunity for a continuation into 1252 and 1240 down the road. Right now we're building very narrow range at the lower end of the sell-off, which means again any bounce could be a failed new high, could be a failed range expansion up here, which could lead to a selling opportunity down below. So that's what we're looking for here in gold. But now that we're around value, we could see this thing chop a little bit longer before we start to see a move. So keep that in mind. Lastly, taking a look at Bitcoin. Bitcoin has not had any luck in finding support here recently. It had formed a very nice narrow range at these highs, but when it pulled back here, it failed to hold the midpoint in 8,500. This was the shot for bulls to really take the ball and run with it, and they failed to get that area bid and keep it bid. Instead, prices pulled back, and now we're just kind of hanging out. Overall, this 7,500 level right here is very significant. Again, there's an LVN if you scroll out a little bit, and that's kind of the last line of defense before you start going back toward recent lows. So again, this has not really been very bullish overall in Bitcoin. It's had trouble trying to find legs here. 7,500 kind of that last major area of support before you just start looking for new lows to defend. So right now looking weak, but overall 7,500 continues to be the level to hold. Alright, that is it for now. We'll see how this plays out heading into the new week of trading. We'll be back in the trading room starting at 8 a.m. Central this morning. Looking forward to seeing you all. Take care and trade well.